So the stuff I'll be talking about isn't quite as exciting as most presentations always are. This is the stuff that, if you want to do it as a business, some of you have probably already crossed a lot of these hurdles. A lot of these hurdles we came through because of the information that we learned here in the last couple of years. So I'm very grateful to be back the third time and to give some of these presentations that haven't been given before, like legal stuff. So I hope this is a precedent for years to come as people do this stuff.
Jason, talk loud.
Okay, I'll try to talk loud. Not feeling too good here. So, what we're going to talk about today, legal issues. And first thing to know is that I'm not a lawyer, I'm not an accountant, and I'm not an insurance agent. But I've interacted with all these people and absorbed some. Some of the information I've gotten has been proven wrong over the years. Hopefully I haven't spread too many things that turned out to be wrong, but so take all this stuff with a grain of salt. It's all, none of this has been vetted by anyone else. I wrote this in the last few days based on about 1 million folders on my hard drive with different documents I've collected and things like that. So I'm welcome to comments or criticism. I'd love to develop some of this stuff into a document that might be usable for the community at large, posted on the internet or whatever. So, so the first thing is your business structure. Then there's the IRS, the EPA, you've got the state comptroller to pay your road tax to if you're subject to road tax in your state, which most people are. You've got some local issues like zoning and occupancy permit, with fire, water, and air boards. All those people want to get a hand in what you're doing to make sure you're doing it in a way that's going to be safe for the community. A lot of us struggle with dealing with these local people because a lot of times they just really don't have a clue. But you have to remember that they're people with families in your community, so they do have your best interest in mind. The truth is that usually the bureaucracy hasn't caught up with the technology. We have to be somewhat respectful of that and not just put it in their face that what we're doing is cool and that their laws are stupid and outdated, which they often are. Talk a little bit about SPCC, spill plan, fuel quality and product liability is a legal issue. What to do about dealerships that don't like us, hardly any like us, and then competitors. We've had some interesting run-ins with competitors. There's really not going to be a lot of pictures. This is mostly the boring text stuff that you just have to read and absorb. This stuff will all be available online. Some of these are bullet points. Every bullet point I may have spent days on. So a lot of these are nuggets that you're just going to really, really have to search to find. So please try to absorb it and let me know if you have questions. Just real quickly about us, we've been collecting oil and distributing biodiesel for a few years. We only do one night open a week to the public. We do an open house, and this is something that I really recommend for people that might be trying to work kind of behind the scenes. Give yourself some public exposure. It's really good. It's really helpful to get the hard questions. We started as a co-op, turned it into an LLC right after we got back from the first collective biodiesel conference. We're licensed to collect oil and haul, but we're not licensed to process it, so I'll go into some of that. We're also licensed to haul petroleum, which you wouldn't think we'd care about, but as soon as you put that one drop of diesel in there to make it B99 for the IRS, you're probably going to be required to get that license in your state. It's a very onerous licensing process. So business structure. So one thing that I didn't know is that I always tell everybody we're an LLC, and then the smart people say, oh, LLC, but are you a partnership? And I say, no, we're an LLC. Eventually I figured out that the IRS doesn't recognize the LLC. Under the covers, you're still something else. So you start out life to figure out, are you a partnership, are you a sole proprietorship, or a corporation? Lots of different little subtleties here, but just be aware that there's more to know than just these three things. You need to do a little research and figure out what's the best entity for you. So an LLC is a limited liability company. It's not a limited liability corporation. So a lot of people think that because we're an LLC, we're a corporation, misusing that last letter. A partnership requires a detailed agreement about the split of profit and loss. We thought we were just going to be a third, a third, a third. It's not that simple. There's things like who puts in the most money, how much loss does that person get to write off, who owns the assets. All these kind of things play into it. There's all these scenarios you have to run through. It's just not as simple as saying I'm 60%, you're 40%. Yes.
Just on the LLC piece, varies by state. You're exactly right that it's a state-recognized entity, and so when you file your articles of incorporation with the state, they determine, because in some states like mine, limited liability corporation's okay. So
really?
yeah, so So it just depends on what your state is, and they will determine exactly what language you need to have in there, you know, what rules there are about actually what the corporate name is, and how you identify yourself. That's all very specific to each state.
Yeah, and none of these people, or at least in my state, they don't require for you to have anything in writing. You just fill out their own form. So I have my attorney saying, well, what's your partnership agreement look like? And we don't have one. So we'll go into some more of this as well. A big important thing that I wish we'd done is find an attorney and an accountant first. Even if you have to spend some money to test the waters and maybe hopefully get some free consulting along the way, but find an attorney who kind of gets what you're doing, or at least is willing to do some research. The same with an accountant. We have a really great accountant that does our taxes, but when I said, can you do my 720s? He said, well, we've never done that, but I'm sure he's learned. So at least he's willing to learn, but at the same time, I'm probably going to continue doing that myself.
Can I just second, third, fourth, and fifth that statement? They will keep you out of trouble. And there's a lot of trouble you can get into if you're not careful. So
risk mitigation.
Yeah.
You know, just like Dave Oldthorpe said, pass that risk to someone else by giving them all of your information and letting them figure out the best way to do it. Now, one of the things that we find home brewers, small-scale people do is try to skate through these gray areas. And so they don't really want to admit that they're selling something or that they're doing this. And so what they do is they feed their accountant and bookkeeper all this kind of pseudo information that's just not all true. But really, like the insurance guy, the broker said, it's his job to pitch it to the other people. And it's your accountant's job to pitch it to the IRS in the way that's favorable to you. So if you don't give all your accountant all the information, you're really cheating yourself. So register your name with the state entity, and then get your EIN from the IRS. Find out your SIC code and your NAICS codes, which are some pretty obscure things for what we're doing. Basically, if you build a diesel engine, it's 5432 or whatever number it is. But if you're making an alternative fuel to power a diesel engine, there's a bunch of them that you might think apply. And getting those codes when you call an insurance company, that's one of the first questions. What's your SIC code? When you go to get occupancy permits, what's your SIC code? So you need to spend some time researching it and come up with a defense that might need to go through your attorney, because you want the SIC code that has the least hazardous materials relationship. So you want to be able to say you're just doing vegetable oil. If we can argue that vegetable oil is more, or biodiesel is more like vegetable oil than diesel fuel, then you'll have a tremendously easier job. And if you start that in the beginning, your attorney says it's vegetable oil, your accountant says it's vegetable oil, and you get, you see what I'm saying? It just keeps on going. There's also a Dun & Bradstreet number you can get here called D&B. I've never found any use for it yet, but we established it, and there was one time where somebody said, do you have a D&B number so we can check your credit?
It's been really useful for us, actually, for federal grants.
That's a good point.
It's necessary for federal grants. You have to register in CCR, and in fact, if you're going for grants, you're a grant organization, it's the opposite of what you said, to be humble, Jason, because what they want to see is that your SIC code matches what you say you were doing. So from an insurance perspective, you're exactly right. You want to deal with the least hazardous substances. But from the perspective of if you want to go for grants or if you want to sell to the federal government, because they do buy, they have RFPs out for biodiesel, for corporate construct, then you need to have an SIC and NAICS code, more important NAICS code.
So they know you're sort of qualified.
So that they know that you're a qualified vendor for what you're doing.
Yeah.
What do they stand for?
SIC Standard Industry Code.
I think that's actually right. I don't know what the name
NAICS
is.
is like it's North American Industry Code System, I think.
And that's the newer system.
Yeah. So there's
North American Industrial Classification.
Classification system. Thank you. Yeah.
You used to tell your accountant everything. If you're sliding under the table, tell your attorney everything.
Okay.
Your accountant is required, if the IRS calls him, to tell him everything. There is no client accountant privilege.
That's a good point.
So be very careful.
One of the things I'll talk about is some legal trouble we got in, and how I have a big mouth, and I started talking to different people about what was going on, including the police. And the attorney said something that really rang true to me later on, which is if the attorney goes to court, he can't be compelled to testify. And even when the attorney goes to your competitor or whoever's suing you or whatever, he can be very vague and things like that. But if you talk to them, every word that you say is going to be very specifically used against you. And I guess it sounds obvious, but the way he explained it made a lot of sense to me, that there's this layer of abstraction where he's not legally required to say it in the way that it really happened. you can say it in a way that looks better for you. So we'll talk about some of that. So we've already talked about this. Hammer out your ownership documents, including an exit strategy for partners. This is something we failed to do. And owner draws, this is a big one. There's something called guaranteed payment to partners, which means if you've got somebody who quits their day job and goes and works for you full time, you're basically saying we're going to go ahead and pay you, even if you're operating at a loss. That worked well for us in 2006 because we operated at a really big loss. Otherwise, you wouldn't have been able to pull any money. Well, now in 2007, we're making a profit. So as you do the profit split, at the end of the year, you have to look at, well, if this guy's getting paid a bunch of money and there's nothing left at the end, or there's maybe a few $1,000s, you're only going to get your percentage of what's left, instead of getting your total percentage with him getting a draw of his percentage. So you need to clear that stuff up. That's something that we're in the middle of right now. So when you're a partner, you can't really take a salary unless you do this guaranteed payment to partners. It's really owner equity. And so when you set up your books, this is a big one. When you set up QuickBooks, hopefully you're going to use accounting software, you need to set up the accounts in there correctly with your attorney's advice or your accountant's advice. You need to have things like owner's balance, owner's equity, owner's capital, or what is it, retained earnings. So at the end of one year, we lost $10,000. Then we lost a partner. Well, that partner that had written off $3,000 on her taxes, the next year had to pay taxes on that $3,000 because it was carried forward as retained earnings. So there's a lot of issues here that people don't think about. Also discuss salary requirements. In our scenario, we had 3 of us that were a variety of ages, a variety of levels of career and income. And then we started talking about who's going to do what. Something that somebody else the other day said was really true. Don't say, oh, you don't have a job? Okay, you're going to be in charge because you have the most time on your hands. That's not always the best approach. So understand your risk tolerance. Can we fly under the radar? If I get caught doing it, I'm going to lose my house and my home and all this, cars and everything else. Am I a single guy living on next to nothing? Can I afford to risk it all? Sure. I don't even have credit established yet. I'm 18 years old. So different risk tolerance. Also personal ethics is a big one. If you find that your partners are doing things, or you have employees that are doing things that aren't quite up to your ethical standards, you have to confront them. You have to say, don't steal one. So set a time frame and a debt level beyond which you'll reevaluate the direction of the business. So for us, we started out with about $4,000 in debt. After about 6 months, it was about $40,000 in debt. Now it's about $140,000 in debt. Well, as you go along, you don't realize that, wow, if I'd started in the beginning and said I was going to be $140,000 in debt, I never would have done it. So you got to really think about how much debt you're willing to get into and how much debt it's really going to take to do the things that you need to do. Also, schedule regular business meetings to track the progress, discuss the financial status, and keep your focus. This is a big one. Some people don't like meetings. Some people think that meetings are just a waste of time, that you're just killing time and you're just going over things that really aren't that important. I read Bill Gates' book a few years ago called Business at the Speed of Thought, I think. And as much as I don't like Bill Gates, he's done some really good things. And one of them is improving business processes. And so one of the things he says is don't go into a meeting and ask everybody the status of what project they're working on. Have everybody that's going to be in the meeting email the status to their project and be prepared to talk about it when you get into the meeting. That way everybody else has read it and they can say, well, I read that you already did this, but how's that relate to such and such? So if you're going to have regular business meetings, make them useful. Don't make them just status meetings. And make sure financial status. Make sure that everybody kind of understands what's going on and that they're not surprised when you say, oh, we're now $140,000 in debt. What? Why did you tell me? Got to communicate. Contracts. So I sat down about 2 weeks ago with an attorney, kind of non-practicing attorney friend, customer, and said, can you work with us and get us some contracts together because we really don't have much. And I identified 7 contracts that everybody has said these are absolutely critical. You've got to have these things in place. Number 1, your partnership, LLC, or corporation agreement, however that's defined in your state. Number 2, a service agreement with your oil sources. Again, we don't like to call it contracts, but you really need to have that agreement in place unless you live in an area like Steve has had great success with handshake deals. That's fabulous. If it doesn't work in your area, be prepared to back it up on paper. A non-compete agreement for employees and key partners. A big one is one of our key partners that throws us leads all the time. I had a headhunter call me and offer a job that was basically setting up the yellow grease arm of the brown grease hauler that we're in partnership with. So it was kind of a stroke of luck that they called me. They got my referral from somebody else. So my partner doesn't know that I found out that they're going into our business. So if we had a non-compete agreement, we would at least potentially be obligated for them to tell us that they're considering it. Now, when I asked them at the beginning, let's put something in writing, they refused. No, we just kind of like handshake deals. So the company is Liquid Environmental Solutions, and if you're in California, they have partnerships with yellow grease haulers all over the state, and they go in together and say, they get the yellow, we get the brown. Eventually, you might have a competitor. No, you heard it here first. A non-disclosure agreement for partners. We'll talk about that. Let's see, employee agreement, non-compete, non-disclosure for employees. Kind of obvious. And for contracted workers. So if you hire a welder to weld on your old propane tanks, you might want to put something in writing that says he has his own liability insurance that's going to cover welding on this tank filled with flammable gas. That'd be a good one. An agreement with customers who don't pay in advance. We have a customer where we buy B5 from a petroleum distributor. Our bill is not due until the 10th of the following month, but we told this customer they need to pay us on the 5th of the following month. So it sounds like it worked pretty good. It's a pretty good amount of money, about $15,000 a month, but they don't pay us on time. So last month we were late on our payment. We don't have anything in writing. We don't have any interest, any fees, any penalties, or anything like that. And the way that company's set up, the bulk of their money goes to these fuel payments because they're transporting people around. If they spend all their money, we're going to be the last people they pay. Their motor coach payments are going to come first so they don't lose their equipment. So realize that as a small company, you're probably the lowest person on the totem pole in your customers, if you have a reseller or an end user. Also, an agreement with customers who use company property. We have 5 refueling stations in the field. We own 2, and then we own 4, and the customer owns 1. So all the people that don't own our equipment have absolutely no financial stake in what we're doing. We gave them the fuel for the first batch, and then they pay us when they get the second batch after they've sold it. We don't have anything in writing with those. Some of those were grandfathered in from the other biodiesel producer that we sort of acquired their assets. So these are contracts that you need to think about. Insurance and bonds. General liability policy is hard to get for biofuels. It took us months. We shopped around a lot. Actually, I should say our awesome broker shopped around a lot. They didn't know how to classify us. They asked a million questions that we didn't even have answers for. So shop around for an insurance broker who will shop you around to insurance companies. We pay about $4,000 a year for a $2 million general liability policy. Some of you may have heard this already. It doesn't cover most of what I thought it was going to cover when we got the policy. I went through all these scenarios for hours on the phone with them. Let's say we're driving in our truck and somebody rear ends us and the tank collapses and it spills on the ground and some other car goes driving by and slides in the grease and crashes in. Is that covered? And they're like, wow, I don't know. And then they finally called back and said, no, it's not covered. So it was scenario after scenario where they said, no, it's not covered. So just be real careful because one hit and it's over.
Can you describe what it does cover at all?
That was what I asked them. Yeah, they said if somebody comes to your property and slips and falls, you're covered under that liability. If you put fuel in somebody's car and it damages their engine, that might be covered. But we found actually that that's covered by our fuel supplier. His liability.
Also, one other thing under insurance and bonds, for things like where you may need a state bond or just in general, like in California, sometimes they want to see a specific policy with some specific clauses that they have come up with in your policy to do that particular function. So you need to sort of talk to your state agencies to make sure that your policy really meets the requirements that they have set as a minimum standard. Yeah,
it's kind of a chicken and egg thing. If you need a bond, and the bond, which I'll go into here in a little bit, actually no, I'm not going to go too much into it because it was a state thing, but it took a very long time. We had almost given up. We had pulled $30,000 out of, we secured a personal line of credit with $30,000, and we were about to withdraw and deposit in a certificate of deposit, sign it over to the state for 4 years to be able to haul 1 gallon of petroleum that we even didn't even have to pay taxes on because it was already paid for by the supplier. We had all this ridiculous stuff set up. When our broker finally came back and found a underwriter for that bond, the only way he got it was his company had acquired another company, and they had their first company meeting and said, can somebody please help these guys? Somebody's like, yeah, what the hell, I'll do it. So you really have to find these people that are willing to work with you. So policies are very specific. But back to your question, Matt, what does it really cover? That's a good question. And I got so frustrated with them that I think they got frustrated with me and they transferred the policy to another agent. Because I asked so many questions. They kept coming back with more and more rate increases for the different things we wanted covered. And they just added up to so much that it was way more than the value of the property over about 2 years. I would have to lose everything to make it worthwhile, except for the general liability policy. So trailers covered, our tanks getting covered, our equipment getting covered, everything was way more than the value of the equipment.
Jason,
Yes.
what company did you get your general liability policy through?
Let's see, Dave, what company did I use? I forwarded it to you, was it Essex?
I believe that's it.
Essex. See, here's the thing with insurance, and Dave can speak to this more, but what I found is I had this guy named Benny. Benny's doing all this work for me. And then he says, my company's Watkins Insurance. And then I get this fax letterhead and it has some other company's number. Then I get the insurance paperwork and it says Essex. And then underneath that it says underwritten by somebody else. Then I flip to the next page and it's another company. Then I flip to the next page, there's a company. I counted 7 companies associated with our general liability policy. So there's not a, I mean, I was kind of hoping, oh, it's State Farm, it's whatever. But it's all these under the scene, behind the scene companies that I don't know how to.
That's the only one we found. We had to
Essex?
shop- We had to shop around for
Oh.
a long time.
I guess that's, okay. Well, Essex. Very good.
Lloyd's of London will not cover you.
Somebody mentioned Zurich, which owns.
Yeah, I think you did.
Yeah,
State Farm or
Zurich-
something?
the problem you'll probably have with Zurich is that you're not big enough for them. A lot of companies like AIG, for example, have a $25,000 minimum premium. So if you're not spending at least 25 grand, you're not big enough for them to talk to. And that's the biggest problem.
That brings up a good point. So, can be based on your revenue. So, probably is, and we're just not aware of it. So, when we first started out, they said, how much do you make? What's your revenue? We said, we don't have any revenue. Well, how much do you think you're going to make? So, probably 40,000, 50,000 this year in total revenue. So, they wrote the policy. Well, this year we're going to make about $500,000 because the price of biodiesel has gone up so much. So we might be facing a massive retroactive charge for this year that we won't even know about till the end of the year. So that's something, it's that Pandora's box I don't want to open. I don't want to call them and ask them because I hope it won't happen.
It's not an exponential increase, it's an incremental.
Okay.
Their minimum policy is $2,500, and that's based on $250,000 in sales.
Right,
Okay.
so if I could just add to that, so if you have less than $250,000 in sales, you're gonna pay $2,500.
Yeah, exactly.
So it's not never gonna go below that, but if your sales go above $250,000, then the rate is going to be applied to the excess, and there will be an adjustment, which Jason describes as a retroactive increase, which I would describe as simply as an adjustment and settling up. And I will point out that you can also have decrease, retroactive decrease, if you overestimate your receipts. So it does normally go both ways.
Okay. And then the state bond might be required to haul petroleum.
And if I could make one other important point on that too, the revenue, it's called a premium basis. Somehow underwriters have to measure how much business you're doing, and revenue is the most common one. But if you're in a business like this where prices are going up every week and you're making more revenue but you're not making more profit, it's not a good thing for you. So it's much better if there's an option and you can get another premium basis, such as the number of gallons handled or processed or made or what have you. On a per gallon basis, it's going to be more fair to you than on a strict revenue basis.
It's a good point. So hopefully Dave, as he's coming along with all of us, does some research and develops some of these strategies for all of us and can be a good resource for us. Okay, so now I want to spend a few slides talking about the IRS, everybody's best friend. So the IRS, just some of it is just the syntax of how to talk to these people, the terminology they use, the structure of their website. First of all, anything you want from the IRS, just Google for it. If you say IRS Form 720, the first hit is going to be the actual IRS PDF 720. So let's see, they use a variety of documents including publications, instructions, and forms. So let's say you need to fill out Form 720. So how do you fill it out? Well, there's an instruction, but it's only about 5 pages long. Well, what if you just really don't understand what they're saying, and what about all the history behind this and the context? Well, there's some other publication that you read, but they don't call it 720. because the publication can encompass multiple documents, multiple forms. So publication 510 is the big one for us, which talks about all these fuels. And then from publication 510, you find out about 720. There's a million other ones. So publications describe in somewhat layman's terms. Now there's another layer that I haven't mentioned, and that's the actual tax code. So when you read these publications, they talk about tax code. Tax code is harder to find. I haven't found a great resource just to type in code 6146, parentheses C, parentheses 3. There are some sites like regulations.gov, I think is one of them, but it's kind of a poor search engine, and because you have these parenthetical addendums, I guess, to the suffixes, they're a little harder to search for. You wind up reading a lot of code. So forms are what are actually filed. Instructions give a line-by-line set of instructions. It's advised to read the publication first, then read the form, then the instructions, then fill out the form. This is an important one. Keep a copy of anything you mail and write on it what day you mailed it. I have had a massive amount of trouble with 720s with the IRS. Some of it was our own fault, some of it was bad advice from the IRS, some of it was just simply typos. So when I look at my stack and they call me and they say tax period, that's the other thing, it's all based on tax period. So they say in tax period Q107, you said this. So I flip through and I say, okay, in August of that year, I mailed you this document on this day. Here's a big thing. When you call the IRS, they don't see what you filed. That data gets entered into the computer, and they see it in a whole different structure. So I say, well, look on line 73. I put that 24 cents here, and it's 2,000 gallons. And they say, well, all I see is 37.68. And I say, well, where are you getting that number? I don't know. I can't tell you. They say, I could put in a request and pull that form in about 3 weeks, I'll call you back. So you lose a lot of momentum with the IRS. My advice with the IRS is take things one at a time. Don't get a million things going at the same time. Try to do it right the first time.
In my deal with the IRS, I've always, my accountant has always told me, anything, if you send it to IRS, you always send it certified.
Yeah, always certified.
And when the ticket comes back, you file it with the paperwork, or a copy of the paperwork you sent them.
That's a good point.
That, because somebody has to sign for that, that way it's guaranteed when they say, well, we didn't get your form, you say, well, according to this, you do have it.
Yeah, good point. Okay, because they're big and they probably lose stuff.
You know, for the, what, $7 it costs you to send it, it's worth it.
Well, also one other thing is, the Kentucky office is where they do all this excise tax stuff. It's the Cincinnati office, but it's based in Kentucky. So your local tax office is whatever the biggest town near you, but they don't do excise taxes. Excise taxes are in Kentucky and Cincinnati. So you'll see them referring, there's a whole process they have where they have the person that you talk to that knows very, very little, then they can have it transferred to an agent, which is somebody with some real authority. And then beyond there, there's auditors, agents don't do audits. There's a whole structure that I'd love somebody else that knows even more someday to give me a presentation. Is there another question?
If the IRS ever sends you a form saying this is your last opportunity for a hearing, you should always send it back saying yes. A hearing is to your benefit, not. I had one of my employees just shove one off on the side, saying it was your last chance. It wasn't really my last chance, but I'm telling you, it's been a pain in the butt over their mistake to fix it.
Okay.
If you say yes, most of the time, they won't even want you to go to the hearing and they'll drop the thing. But if you go to the hearing, and you have proof that you're right, the person will look at it and say, okay, and then you're done. You actually went to a legal hearing, and anytime they call you back, you can say, well, you can refer back to that hearing.
There's
good for you more than they are for the IRS.
There's one important point here too, and that's penalties and interest. So just like with your income taxes, you can file an extension, but you have to pay interest and penalties on what you should have paid if you didn't know how much to pay in the beginning. And so one of the things that we found is with these 720s with the excise taxes, luckily in our favor, they're owing us money, which is kind of interesting because I've gotten interest checks from the IRS. So if I didn't file my 720 for a year and a half, and then I go back and file it later, and they owed me money, I've gotten interest back from the IRS. So it's never too late to do this stuff, but you have to be careful. In one of these cases with the vegetable oil stuff, which I'll go into, we filed 7 or 8 quarters at a time with the 720s, and the 720X, which is to amend the 720. I'm going to talk about some of these documents. But anyway, they came back and said, okay, we owe you all this money, but you should have filed, there's a different penalty and fee schedule for all of those 7 quarters that you should have filed. So they said, but what you should do is wait for everything to be done and then write us a letter that says we request that you abate the penalties and interest. They said we always do it for first-time filers, or first-time abaters, as they say. So let me get through some more of this IRS stuff. There's maybe 2 or 3 more slides, and then we'll ask more IRS questions too. So in the future, excise taxes will be filed electronically. This is a big one because for those of us counting on that $5,000 to pay the bills that we're waiting for the IRS excise tax refund, for every load of fuel, we get 75.6 cents per gallon back because you have to pay the road tax. So we get a load of 7,500 gallons. That very day, we sit down and do the 8849, which I'll talk about in a minute, and we have to mail it in and wait 6 weeks to 8 weeks to get it back. Well, the IRS instituted this new excise tax reporting online, and then about 2 weeks later, they canceled it. So there's this limbo right now where it says that you can file it online. You go and pay to register. You pay $50 to a company to do it. You fill it all out, and then it says, oh, it doesn't work after January 1st, 2008. So then you call the company and say, what's going on? And they say, well, it's this whole weird thing with the IRS. So it's a mess. Okay. So some IRS rules for biodiesel. You guys may be familiar with these, hopefully. Fuel used on the road is subject to federal excise taxes, period. If you figure out how to run your car on water, you have to mail in a check for 24.4 cents to the IRS per gallon. At first, I just couldn't believe it until I had the person say that very statement. If you figure out how to run on water, you still owe it. And what she said to me really stuck with me, and that is, if the IRS had a way to put a sensor on every odometer and a sensor on the road to know that you're driving it on the highway, that would be the most fair way to do it. Technology doesn't exist, so all they can do is tax gallons. So that's just where we're at. All right, so biodiesel distributors who want to blend and get credit must register on the Form 637, and very specifically for activity letter M. Well, activity letter M stands for mix. I just heard that a couple weeks ago. I always wondered what it was. So this 637 is the same form that's used to register for a variety of excise taxes. Now, the basics behind excise taxes is an old law about how you pay taxes for something when something happens. And that's about as deep as I can get into it. Road taxes are excise taxes. So once you fill out this Form 637, they're going to send somebody to your business, and they're going to spend several hours asking you questions. And before they come out, they're going to give you about a 20-page document. It is a very comprehensive list of things that you have to prepare for them. They're going to ask you for flow charts for how you do your business, who are your suppliers, who are your customers, what your profit margins are. They ask you a lot of information. And what they're trying to do is they're trying to look at the stuff that you've presented and said, do we trust these people to take in taxes from their customers and then pass them through to us? And with fuels, obviously, it's millions and millions of dollars at any given time. So they're very careful about that. Once they approve the registration, which we were rejected the first time, then when they sent somebody out, they approved it. Then you have to file the Form 720 quarterly to pay your road tax and to receive your blender's credit. Now, the 8849 at the bottom, that's something that you can file at any time based on whatever you've already sold to get your money faster. But it is based on sales. So what I said before wasn't actually right, now that I think about it. If you get a load of 7,500 gallons, you can't sit down and write out the 8849 and file it because you haven't sold that fuel yet. So in either case, it's only based on what's been sold. The tricky thing is when you get into filing an 8849 in the middle of a quarter, and then you file your 720 at the end of the quarter, but you haven't sold all of the fuel from that particular load, you're always going to be halfway in some load or another. So you have to be very careful about how you track this stuff. So I developed a spreadsheet that we use that I'll show you that tracks all of our excise taxes. It's kind of formula-based where I say, we got this much fuel from this provider on this date. We filed an 8849 on this date for this many gallons of fuel sold. Then this is how much is carried over to the 720. This is how much is subtracted out for the road tax. This is how much they owe us. This is the date we filed. This is the date we got the money back. You know, all these kind of things. And RIN tracking too, which I'll go into. We'll talk about that. So let me back up. And does anybody have any questions on this part first?
Can you speak a little more specifically to the blending?
Sure.
I don't know, I paid 24.4 cents and then they pay me 50 cents back if I blended it with petroleum, is that right?
Okay, yeah, that's a good question. And I didn't get into, there's several subtleties here. The IRS has said, well, somebody else said it, but they administer it. That, they have said that if you blend any diesel into biodiesel, then you're eligible for $1 per gallon of the biodiesel. $1 per gallon for the biodiesel that you put into that blend. So if you take 10,000 gallons of biodiesel and you put in 1 gallon of diesel, then you get 10,000 credits times whatever it is, not 10,001.
So there's not actually a limit for 1 gallon. I mean, it could have been 1 teaspoon, right?
It is. There is a limit. It's a lower limit, which really sucks for us in Texas, which I'll talk about.
Okay.
The lower limit is 1/10%. Below
So you have
that,
to add 1/10% petroleum to your biodiesel?
yes, and that's to be considered a legal blended fuel by the IRS.
Okay.
Hence the term 99.9.
Yes, the word B99 shouldn't even be in our vocabulary, but it is because of the IRS. When the IRS law was written, they did it different. They did these two different things. First, they said if you buy B100 as an end user, you get to take $1 per gallon or 50 cents per gallon on your own income taxes at the end of the year. However, if you blend it with a little bit of diesel and then sell it, if you're the quote blender, then you get to take that credit.
Does that work in the reverse direction too for petroleum companies that put 1/10% of bio in and take the credit?
Sure, they get 1/10 of a penny. Or one.
Is there any
If they've
talk
got
on the-
diesel R, it's all good for them right now.
Yes, it could work, but they're only getting the credit on the volume of the biodiesel.
Right.
So, yeah, they could, but
And
there's,
then the 50 cents, is that being discussed to go up to $1? I heard rumors.
it's a good point. Yesterday, somebody presented that it's gonna happen. I don't think that it's been passed yet, because I read the bill that talks about some other things they did, and that's one of the things. God, I hope it happens.
Yeah.
Yes.
Isn't there a federal exemption of 400 gallons per quarter for individuals?
There's not. I'm glad you asked that, because I have had this conversation with several people at the IRS, and here's what they said. So, and I'd love to get something in writing, and all it takes is a letter to the IRS, and they will write it back to you in writing within, I think they say 3 weeks. So here's what they told me. They said that, let's say you take some fuel that's taxed, well, let's say you make your own biodiesel, and you use it in your own car. You are the producer, you're the distributor, you're the blender if you blend any, and you're the end user. So anything that you're responsible for, you personally are responsible for. Anything that is due for that process, you're the only one responsible for it. So first take that as an assumption. The next thing is, there are some supply chains where small producers, or excuse me, small distributors might go to a terminal rack and pull a very small amount of fuel. Well, the IRS has said it is an undue burden on small blenders to have to register as a blender and pay the road tax. So what they've said is that you can pass through that responsibility to the next party. So what they told me is that although there's a 400 gallon per quarter exemption for blenders, that exemption does not exist for the fuel itself. It only exists for that party in the chain. And then whoever uses it or sells it next still has to be paid for it. What they told me is there's no exemption for road tax.
You're talking about state road taxes later.
I'm talking about federal.
No, you're going to address the state
Yes.
road tax issues as well.
That's a good point, yeah. State is,
State is individual, but really there's no state in the nation, I could say this quite frankly, that has any kind of exemption for on-road tax. So
Our
if your
state
yeah, okay, so
Our
Yeah,
state does
there-
too, but
there
it's
are-
not personal.
just for personal use, right?
no. In Texas, the state legislature in 2005 said well, let me read it to you from their rules. Any fuel wholly or partially derived from vegetable oil is exempt from state diesel tax. So it's beautiful.
Oh, but not blended. I'm sorry, we're talking about blended.
It's still the same. Now, when you blend in 1 drop of diesel, or let's say 1 gallon of diesel, you have to pay the road tax on the diesel portion, but not on the biodiesel portion.
Gotcha, okay.
Okay, let me go to the next
I have
one.
one more question about that.
Sure.
If our business structure differs from yours, maybe significantly, because you guys are way, way bigger than we are, we're cooperative with 10 people, and as far as we can tell, we're not going to be technically selling our fuel, someone will be investing in the co-op, and then they'll be receiving fuel not as a sale or retail of any kind. We still have to pay our road fuel tax, our excise tax for the fuel, and we have no qualms about that. We're certainly going to. Do the blending credits only apply for people who are selling fuels?
The blender's credit only applies for blending ASTM certified fuel. I say that ASTM certified, but what I really mean is fuel that has been demonstrated to have passed the ASTM standard test. A lot of people get...
But does that have to be sold? I mean, so assume we make gallons of fuel, we blend in a little bit of petroleum, and we distribute it to members,
Mhm.
but they're not paying for it, there's not a sale actually going on.
Yeah, it's not about that. It's about your fuel being registered with the EPA. You would have to be registered. Now, I should have mentioned this earlier on. I'm not a biodiesel producer, Never have been. We've made batches here and there, but my understanding of those rules, and I've done some research, it's something that I don't really go into. I'll mention this now. In order to produce biodiesel, there's a few things that you have to do to legally sell it. And to legally sell it, the same rules apply to blend it and to get the blender's credit. So you have to register with the EPA as a fuel producer. Then you have to register the fuel that you're going to produce with the EPA. So biodiesel's already been registered with the EPA. So the rules with the EPA say that you have to pay several $1 million for this Tier 1 and Tier 2 testing to prove that your brand new fuel never seen before on the earth is not going to kill the first person that breathes the exhaust. So the National Biodiesel Board in 1998 and 2000, they spent those $2 million. And what they got is a lock for 15 years on that test data. So what that gives us the benefit to do is to merely borrow the test data that's already been done by the MBB and then tell the EPA, test data's already been done, here it is. Well, the MBB has the right to charge us whatever they want. They've determined that it's a lot of money. For a small producer, it's only $2,500. This might not be too bad if you're factoring in another $2,500 a year, $200 a month into your business plan. I believe that that's too much because I believe that there are people that can take one of Steve's machines or BioPro or whatever, crank out fuel, make ASTM fuel, and sell it to their friends. If that's what they want to do. What's wrong with that? I mean, shouldn't America be all about providing entrepreneurs the ability to make a business that's very small as well as very big? People like Frankie. So anyway, so there's a process. Let me finish this thought. So the EPA has established a protocol to dispute the MBB's lock on this test data. Todd and I have talked about this a lot. The way to do it is there's an arbitration board called the American Arbitration Association. And you go to this arbitration board and you make your case that you feel that they're charging too much, or number two, an important one, that they have recouped their cost. If you can show, actually they have to show that they haven't recouped their cost. So the idea is you go through this arbitration process, and if that's successful, potentially everybody can sell ASTM biodiesel without being a member of the MBB. So one of the things that I started, and now Todd has also followed up with it.
So is the arbitration between you and the MBB?
Well,
That's
there's,
right.
there's two things here. The first is, one, NBB actually never demonstrated that they spent the money for the test data in the first place. NBB says, I have no reason to doubt NBB and what they said, but the EPA did not require them to basically produce what they spent. And so this goes back, every road fuel is regulated under the Toxic Substances Control Act, okay? And this is really for manufacturers that are, producing all sorts of chemicals. But road fuel is, any road fuel is mandated under that. And so there is this notion that as a person who's investing in the health effects data, and I think this is a fair assumption, right? I should be able to recoup the costs of what I need to do to get the health effects data done. And I should be able to make a reasonable profit. But the the EPA never demonstrated what it costs NBB. And so they can't establish what a reasonable profit is.
Well, through the arbitration process, those numbers might have to come out.
Absolutely.
So what I did was I wrote a letter to the NBB, and I said, I hereby offer you $50 as an administrative fee for the use of your test data. And what I said in that letter was, if you do not reply to this, I'll assume that you don't agree with this, and I'll move forward the arbitration process.
Okay.
So I haven't heard back from them. So I contacted the EPA to find out, what do I do? How does this process work? And they referred me to this big, long document. I said, I don't even have a clue where to start. Can you guys really help me out? What they said was, when they first came out with biodiesel, a lot of small producers were very concerned about these prices, and they got a lot of calls about what to do about it. They said once the $1 per gallon credit, 50 cents per credit, nobody has ever called Senate. They said nobody has ever pursued this, but that they're waiting for somebody to pursue it.
Well, the main reason why people stopped pursuing it is that at that time we had put a lot of pressure on the NBB to make it a per gallon fee at most, or have an exemption. And what they did was they came out with a kind of satisfactory compromise that I actually agreed with, which was $2,500 a year minimum instead of what it used to be, which was $5,000. And so that appeared to make it possible to be within the scale where it made sense to produce biodiesel as a small business or as a component of a business, but it was not such it was still like gave them something. So yeah. I had that one, was one of the people who called the NBB, called the EPA in 04, 03, and 04 And they
Okay.
said, well, arbitration, but, you know, the fact that the NBB kind of moved forward with something made me feel like arbitration was not gonna be, not likely to work at the time.
That's probably true, especially back then when they had probably just spent all that money.
Yeah.
So
Really
there's, I mean, ideally, like, right now I bought biodiesel from a producer in San Antonio that doesn't have an MBB membership. And so the IRS rejected my credit. Well, it turns out that he just put his certificate number wrong, so they actually haven't accepted the credit, even though he's not a member of the MBB. Now, this part still, I don't quite understand, because I called the IRS and said, can you tell me this producer if he's certified? And they said, no, it's up to the buyer to prove that they have their certificate. And I said, well, how do I prove that if I can't call you and ask you? And it was this whole ridiculous conversation where I said, it's up to me to prove it. You're the people that have the information, and you won't tell me if he's certified. So then I called back and asked somebody else, and they said, go to this website. It's like epa.gov/excise, and right there you type in that company's name, and it will give you their excise tax number. If they're a blender, and it gives you their little suffixes like the M and the AL and all this other stuff. So interestingly, we've now been paid by the IRS for biodiesel that is registered with the EPA, it's registered with the IRS, but yet he doesn't have an MBB membership.
How did he get his EPA registration, or was it a different one?
That's what I don't understand.
That to me sounds fishy.
I mean,
I've talked to
like,
all the parties about it even, and I don't understand how the EPA has, they said, yeah, he's registered. And I said, but he's not an MBB member. And they said, yeah, he really needs to be an MBB member.
they have no budget
Yeah,
for
one more comment on that. Just one
That's
last-
exactly correct. And I know a factory in New Mexico that did the same thing, and the EPA basically told them, well, if someone complains, we'll write you a letter, and then you have X amount of days to really do anything about it. But if no one else complains, we're not going to do anything about it. So he never joined the MBB.
Is that Dave at the Biofuels Research Center? Dave Mason?
No.
Had it down too.
So you just register with
But let me give you one more point too. We have a producer, a former producer in my town that also said, once you're a member, you're always a member. Not necessarily a member. Once you pay for that registration, and maybe it goes back to being complaint driven, once you register with the MBB, at the end of the calendar year, your membership may expire, but the EPA is not going to call the MBB and say, did they renew their membership, or have they paid their dues? So once you get that number, and that may be what this producer did, and he's just not telling me, but he said, I'm not an MBB member.
there's some downside to that in the NBB bylaws. I can't recall what it is, but that's
Yeah,
specifically addressed in the NBB bylaws in a way that is punitive. Like once you
exactly.
register forevermore, they could go after you for some infraction that they never enforced.
Another reason not to join unless you really want to.
Right.
So my whole
That was a
thing with
concern
this-
for a while.
My whole thing with this is not so much that the NBB is ripping us off, that they're in the pocket of big soy, which might all be true, but it was that I don't necessarily have to agree with their politics because they have their whole legislative agenda. And if I don't want to be a member of the trade association, that shouldn't prevent me from engaging in commerce with a product.
So I went through the regulation, and basically there's a section in there that if I was a business, if I want to go, there's a $3,200 deal that you can pay for.
Good point. It's $3,200.
$3,200, $2,500 magic point seems interesting. But if you've got one complaint, then any additional business can go in there for $100 additional dollars. Or the EPA has a contract with ARB. And so there's a clause in there where basically the EPA, if it's an enforcement action, if it's perceived as a demonstrable enforcement action, the EPA picks up the tab.
So that's where we're headed right now.
That's where I'm working
Todd
on
is
right now.
working on that. Hopefully we can do that. So,
Wow.
Okay, so from our perspective, we're 10 guys, we're doing Appleseed, we're doing like limited fuel compared to what you guys do, tens of thousands, or hundreds of thousands of gallons of fuel. So if we're looking for a blending credit, we have to register our fuel with the EPA and register ourselves with the EPA as a blender. In order to do
Not
that,
as a blender, just to be clear.
As a producer?
The EPA doesn't know about blending. EPA is about producing.
Okay.
So you register with the EPA as a producer of a motor fuel.
And we have to register our fuel as biodiesel, and in order
Yeah.
to do that, because of the testing, we have to register with NBB and pay them the $2,500
Right.
to use the registered fuel.
Right. And then with the IRS, you register as a blender of your own of the fuel.
And then we can get this credit.
Then you can get that.
And so if we don't want the credit, can I skip all those steps, or do I
Yes.
still, okay?
If you don't want the credit and you're not selling it, now I don't
Because I
want to
mean,
get
for our
too deep.
scale, we're not, with 50 cents a gallon, we won't be able to recoup $2,500
Right.
for the registration, so there's
Which
no
is
reason
why-
for us to do that. Now, are we still required to register our fuel or our production with the EPA?
That's a good, that's,
Okay, because I'm interested in where the radar is, and that's what
maybe Mark.
Okay, in '04, I spoke with Jim Caldwell, or '03 or something like that, so this may have changed since then,
He's
but
the same guy.
I said, what, so small guys, that doesn't make sense, blah, 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 and he basically said, well, we're not enforcing. And then I said, okay, so say we're a co-op, and then I had to explain to him what that meant, which, like, was my definition at the time.
Yeah.
And I think what I was talking about was, like, a university project that is putting on-road fuel into a couple of buses, or a fleet doing their own in-house production, because that's what I was interested in. So I didn't exactly talk about what we may refer to as a co-op. And he said, well, we really don't want people taking advantage of the fact that we kind of have this research exemption. I think he actually basically said that they do allow for research, and they don't, but he was like very specific about that can't go on forever, you know, and so forth. So there may be a point where they may decide that some people really should be, some businesses or you know, projects really shouldn't be taking advantage of this, of that not
Okay,
enforcing.
so I mean, but wait a second, there's two things being confused. This is to get money back for fuel that you produce. That's separate from filing to pay your road taxes. I think that's fundamentally different. Those two things are separate.
This was like health effects data access.
Yeah, absolutely.
Registration
This is for I want to get my road tax that I have to pay back unfairly because I'm using a recycled product. That's different from the IRS requirement for paying your.
So I mean, if we want to skip getting the credit back, I want to know what we still have.
You still have to pay the road tax.
We're agreeing to pay the road tax.
Okay.
But what we want to know is, okay, how do we have to raise
And then also you need to look at what your state. He's going to go through state comptroller stuff, but your state probably has rules too about putting fuels on the road. And I know you said Texas has one. I know California has a bit of an onerous process to get your fuel basically registered to be used.
The one I'm worried about is the registering with EPA as a producer. I don't know if we don't have to do that if we don't want the credit.
You've got a real specific question that's real important, which is,
Does
does somebody who's not going to sell the fuel but is going to use it among its members have to register as a producer? I understand the question, and it's that the EPA has not given clear guidance on that. As Mark said, they've been a little wishy-washy about it. And if I were you, okay, if I were you, I would not register with the EPA.
Is that, I'm sorry, let me just get, is that a common opinion? How do you feel about that?
I can just respond on our experience, which is that we did not, for a while, we just did, quote, homebrew, fuel amongst ourselves, but we found it to be very important to pay our road tax because that's where the enforcement might come in.
And then,
So we were filing the 720 for road tax quarterly and not taking the blender's credit and not registered with the EPA. And the IRS was totally happy with that.
That's what I would do.
Okay. Because I mean, we don't want to duck something.
Okay.
We think that people.
I got you. We just got a lot of other people who have questions.
You didn't talk about using it for off-road. We have half of our vehicles are off-road.
You know, the off-road thing is a whole different subject, and I'm not very knowledgeable about it, but like on the local B100 Biz forum, we've had several people say, I just sell it to farmers, no big deal. And I asked the EPA, I can't remember what they told me, but it wasn't as simple as simply just making it and giving it to people, because it is still a motor fuel. It still goes into the atmosphere. So if you're selling it to somebody, you still have to register as a producer with the EPA.
By the way, you keep saying road fuel. I assume you're going to address this anyway, but a lot of the time, a very common workaround that people assume exists that does not is additive, referring to it as an additive.
Oh.
And the official wording for all of the stuff that he's been talking about is fuel or fuel additive. So it actually does not, just in case anyone's thinking like, oh, I know how to outsmart the rules, it still covers you as a blend, as an additive.
Try registering an additive with the EPA.
Yeah.
I'm going to talk about that a little bit here too.
In the interest of time, let's keep some questions till the end.
Okay. Okay, yeah, let's do that. We're getting there. Okay, so this is IRS for biodiesel. So, what time do we have to get out of here? We started at 11, so usually we have an hour and a half for these.
We'll go till about 12:15ish, see where we're at, because we don't want to get too much past lunch because they may not let us in.
Oh, right.
Okay.
There was a sign on the door that said we had to be out of there by 12.
You're kidding me. What?
No, it was you.
Screw them, keep going.
Okay, yeah.
Pretty much.
Okay, this is the good stuff. So, okay, so the IRS rules for vegetable oil. Vegetable oil, I put a slide in another presentation, I probably should have put it here as well. Is it legal to sell vegetable oil in any way whatsoever? And what I said in my other slide was it depends on who you ask. If you ask the EPA if you can sell vegetable oil and you're burning in your TDI, they're going to say, no, refer to this certain document that says vegetable oil has been shown to cause engine damage and should not be used. It is, meat vegetable oil, as they refer to it, is not biodiesel and should not be used. It is considered unlawful. They don't call it illegal, and they don't cite any law or anything punitively. And according to the people I've talked to at the EPA, it's because they know that it's cool and they know that it's something they should support, but there's nothing in their current structure to do so. So it's kind of like they're really not enforcing it. So the IRS, on the other hand, has a whole different take on it. The IRS goes back to the water rule. If you can put it in your car and run on it, you know, you got to pay taxes on it. So here's what you do. If you're going to sell vegetable oil or put it in your own car, and you know I should have said this, just like your question about co-op, if you make your own biodiesel in homebrew in your backyard, you're supposed to register with the IRS, Form 637, blender registration M to do your biodiesel stuff, do your blending. Even though you're using it pure, you're still supposed to register with the IRS as a blender, even though you're not mixing it. So there's some things here that they don't really have made into an intuitive way. Same for vegetable oil. The difference is vegetable oil sellers must register with an activity letter of AL, which stands for alternative fueler. There's another one that's called AM, which is an alternative fuel mixture. And the subtleties between there, it sounds pretty simple. I'm either mixing it or I'm not. But when you get into what you're really doing with an SVO system, you got some point along the way where you're mixing it a little bit with the diesel as it's flowing through the system. So some of this is semantics, how you want to register yourself. It depends on who you talk to at the IRS. So we requested registration for both. They're coming out to our shop in August to figure this out. But they've already approved the credits for us and we've already been paid for it. So what I'm getting to here is first thing you have to do is you have to file for 24.4 cents per gallon road tax. Somebody asked me the other day, they thought it was 18 or 19 cents. I think it was Matt. I brought the slide, I'll show you that too. It is 24.4 cents. So the IRS has defined something called liquid hydrocarbons from biomass. They did this a few years ago and nobody really understood it or knew what to do with it. A few months ago, I'm always trying to check out my competition, and Darling International is the nation's only publicly traded rendering company. So I started reading through some of their 10K filings online, and I found that they've received $1.7 million in credits from the IRS for this liquid hydrocarbons from biomass. So I called, I called Darling, and I said, I didn't think I was going to get anywhere. So I called this major, national company and said, hey, I was wondering how you guys get that credit for liquid hydrocarbons for biomass. They said, oh, you need to talk to this guy. So they transferred me to this guy and he said, are you an investor? And I said, no, but I sell fuel to municipalities, and a lot of municipalities could really benefit from being able to take old cruddy waste oil that we perhaps buy from you or whatever and burn it in their boilers. So it's like, oh, okay, here's what you do. Talking to the right people.
Nice.
In fact, there's a book by Kevin Mitnick, which is like a well-known hacker about social engineering is what he calls it.
Nice.
And you just call and talk to the right people, and you get this information. So this guy tells me that they hired a company that made them renewable diesel. And so what they did, for those that don't know about renewable diesel, or diesel R as they're calling it in California, is it's the idea of taking vegetable oil, cracking the molecule, and turning a fatty acid into a hydrocarbon. And that's as technical as I'm going to get about it.
Just to clarify, did you mean liquid hydrocarbons derived from
I'll get to that too. I'll clarify that in just a minute. So, so they crack this molecule, they turn it into a hydrocarbon, and suddenly it burns just like diesel fuel, and it passes D975. The bad thing is it has the same rough emissions profile as D975. So otherwise, we should all be doing renewable diesel, but it doesn't work that way. So I called this company and said, hey, Darling International gave me your name and said you do renewable diesel. How did you set it up for them? So he's like, well, this is how we did it. He said, you take this plant that we build, it costs about $75,000, you buy our proprietary catalyst, you put the vegetable oil in, and out comes this renewable diesel. So what they do is they take 50% renewable diesel, 50% vegetable oil, and they burn that in their boilers to keep all of their industrial processes. That product qualifies for an average of 75 cents per gallon credit. Because see, renewable diesel gets $1 per gallon even if it comes from waste oil. So they get $1 for the half that's renewable diesel and 50 cents for the stuff that's vegetable oil. They burn it in their boilers and they're making all this money. Interestingly, they did this for 2 years in a row, and they did not take this information on their profit and loss statement. They put it in a special category of deferred income. And so I asked the guy, when's this going to go on your balance sheet? And he said, our accountants are very, very confident, but they're being ultra conservative by not documenting it. So that was in 2007, and so, or 2006 tax year, so I'm waiting to see what they reported for 2007. But anyway, so I called the IRS and said, I want to sell vegetable oil and waste products from the biodiesel production process for people to use in boilers, like refined glycerin, unrefined glycerin, methanol-laden glycerin, the sludge from the bottom of our oil tanks, oil itself. I want to sell all this vegetable oil-based stuff, and I want to sell it to people who are going to use it in boilers, and they might even power vehicles with it. How does that work? And they said, well, we have this program, liquid hydrocarbons from biomass. You know, they started telling me about it. And they said, but wait a minute, I thought that this isn't a hydrocarbon. And so I posted on, I think the local B100 is, and someone else, I think maybe it was you at that time, Todd, was that you? Anyway, so it was someone else that we traded some emails, and they had done some research, and they didn't have the actual documentation. So they said they were pretty comfortable with taking it. And so what I did was I did some reading, just a lot of Googling, and I found this document called the Tax Technical Correction Act of 2007 as passed by the House of Representatives. And I searched it for this liquid hydrocarbon thing. So let's see, the buttons are backwards. And so what they do is they define this definition of an alternative fuel. They clarified this in December of 2007. And so what it says is an alternative fuel defines alternative fuel to include liquid hydrocarbons from biomass. Again, they use that same quote. For purposes of the alternative fuel excise tax credit and payment provisions under Section 64, 26, and 27. This statute does not define liquid hydrocarbons, which has led to questions as to whether it's permissible for other kinds of fuel. It was intended that biomass fuels, such as fish oil.
Yes, that was our conversation, by the way.
That was us. Okay, good. So fish oil should be is not exclusively made of hydrogen and carbon. They qualify for the credit. The provision, they're referencing their own document. This provision changes the reference from liquid hydrocarbons to liquid fuel for purposes of the alternative fuel excise tax credit provision. So there it is.
Where is that? Go back up
Yeah,
there
right.
with the numbers.
Can you show the document title, please?
Yeah,
Yeah, I'm going there right now. So it's called the Tax Technical Corrections Act of 2007.
It looks like it's still hosted on this MHCO actively,
I don't know what MHCO is.
but it's still available on the net, right?
It is, yeah. And this is just Googling 2 o'clock in the morning last night to find it, because I wanted to actually show it, because I've had this question a lot. A couple of other things I'd like to show you.
What does this basically mean then?
What this means is that
You can find a use for it.
so here's what they're doing. What they told me is they are encouraging people to find ways to reduce the use of petroleum-based products. So the example they gave me, if you can take wood chips and make it a slurry where it's suddenly a liquid, and you can burn that as fuel, you get 50 cents per gallon back. So the only thing that I'm not 100% sure about, and somebody asked me this yesterday, what if I'm using it myself? What if I'm not a business? Can I still register? Well, you can register, but it's possible that they might deny your registration. But when you go through all that stuff with your process flow and all that, and you just say, here's my source, here's my car. Well, you're not going to be paying them any excise. Well, in the car case, you will be. So there's some distinctions here. If you want it, like using the Turk burner, I'm really excited about that. If we could get people using a Turk burner, if we could get biodiesel producers using things like Turk burners to heat their oil, assuming it's safe and hydronic or whatever, and it's safe and all that stuff, then potentially all that glycerin might have another side stream. Or that the vegetable oil, the sludge, what was the word you used, Matt?
Schmutz.
Schmutz, yes. Potentially the schmutz could be used for something that can get us 50 cents per gallon back from the IRS. So that's this is in the publication 510. I have this here too to show that it also talks about liquid fuel from biomass, referring to this specific code.
So to me, this isn't exactly news in terms of boilers. The news is in terms of SVO as a fuel for cars.
If you already knew it, then it's not news to you. But I didn't know it.
No, but I mean, so that piece that
So, okay, what we haven't talked about here is the SVO piece of the car. So the EPA says that vegetable oil is not a viable motor fuel. The IRS says if you use it in your car, you're going to get the credit and you're going to pay the taxes. So I filed 7 quarters of 720s, backdating them to October 1st of 2006, so this is a retroactive credit. So we've been approved for, the first thing they do, even if you don't have that whole registration credit, or excuse me, the AL registration, is they take the first 24.4 cents of the credit and they wipe out your road taxes. So suddenly you can do SVO quasi-legally, at least with the IRS, and not have anybody say that you're not paying your road taxes. And I have a feeling that one of the reasons that the IRS hasn't come after SVO users is because they probably realize that every SVO user can just go ahead and get a credit if they just file the paperwork that wipes out the tax anyway. There's no money in this for the IRS for SVO, none, because it's all tax-free. And then some. So to get the extra 25.6 cents per gallon requires the AL registration. I'm not certain that we grant an SVO home user the registration. If I were an SVO home user, I would certainly apply for it because I have to pay the road taxes anyway. So I think that they're going to grant the AL registration because I think that without the AL registration, you can't pay the road taxes either. And the IRS isn't in the business of telling you what you can use in your car. So all they can do is say, well, we're not going to register you to pay this tax. And if you say, well, I'm going to use it in my car, how should I pay the tax? So there's a catch-22 where they might not want to pay you this as an individual because you're not set up as a business, but they'd be shooting themselves in the foot by not getting the road tax. And you could publicize the fact that the IRS won't take my money, which a lot of us have over the years. We've had our registrations, even for homebrew, we've had them rejected, like ours was in the beginning too.
So in that comment in parentheses without the AL registration, are you saying that you're effectively not having to pay your road taxes by not? Could you explain that? What's in parentheses?
Yeah, that's a good point. Well, see, we already had our M registration, so we're already filing the 720 quarterly anyway. So when I put on my 720 that we used a bunch of fuel for on-road fuel, we paid our road taxes, or we accounted for that in our filing. So they came back and said, we're going to give you the credit for the 24-cent road tax part, but you can't, anything over the road tax, if you don't have the AL registration, glad you mentioned that, anything over the 24.4 cents that you want to get back in your pocket, you can still get, but you have to file it on your own income taxes at the end of the year. And it's a Form 6146.
What if you want to apply the rest of that to biodiesel, road tax?
Yeah, it all washes out.
So if you have vegetable oil and you get tax credit in addition, over the 24.4, can you apply that tax credit to taxes you pay on biodiesel?
Yes.
Okay, so you just can't take it as income, but you can use it to wipe out other taxes not on
Yes.
vegetable oil. Okay.
Absolutely.
Perfect.
I think it's also important that this is just federal taxes,
That's right.
nothing with state.
Yeah. So far we've had 4 states that have put in their state legislature that vegetable oil is exempt from state road tax. I think they were kind of shamed into it because the news came out. It's North Carolina, California, Texas, and Illinois.
Washington, no.
Washington? Hey, number 5.
Virginia as well.
Really?
Yeah.
Okay, good.
Do you have the Texas law number on the road exemption?
So in Texas, this is kind of an interesting one. One of the things you guys might hear me gripe about a lot is living in Texas and dealing with this stuff. And by the way, we still have a number of more slides to go through, probably at least 5 or 6. So
Let's keep moving then. Yeah.
Yes, we know
In
Texas.
Texas, talk to me offline. It's the definition of biodiesel, which is common to another couple of states. They include vegetable oil by accident. Okay, IRS rules for employer. Some of these are just basic things that any business owner should know, but what I find is that a lot of people that go into business to do this stuff, they're not business owners. There's a few entrepreneurs out there, but not a lot. So these are a few things. I put them in the slide, not so much to go in detail about, but so that you could get these slides later and use them as a reference. You need a W-4 for exemptions, I-9 for eligibility. Payroll taxes are due to IRS quarterly. We use ADP, and we're thrilled with ADP. They charge us $65 a payroll shot, and it includes up to 5 employees' paychecks.
Paychecks is also another one like that, and I've been thrilled with them as well. Those are 2 of the biggest. Huh?
Paychecks with an X at the end?
Uh-huh.
Okay.
Yeah, 2 of the biggest in the U.S.
Every quarter is not true if you have too many employees.
Yeah, it does change once you go over 5. That's right.
It's their decision to tell you, and they can, And another one is franchise taxes. That's the state. I'll talk about that. Okay, so here's a big one that a lot of people haven't heard much about, which is the renewable fuel standard. So in 2007, Congress passed the Renewable Fuel Standard called the RFS. And now they're going to call it the RFS 1 because they're coming out with an RFS 2. So this Renewable Fuel Standard allows people that produce biodiesel that have it registered with the EPA and have all this registration thing down to create a credit that they're calling a RIN, which is a Renewable Identification Number. So this RIN is a 32-digit number that you have to include with every delivery of biodiesel that you sell to the next party in the chain. It's a complicated set of things where you put your facility ID and a batch number and all these other things. So when you sell biodiesel, you're not obligated to pass that RIN on, but you're obligated to create the RIN. And I've had to do a lot of research with this stuff in Texas because we started buying fuel that didn't come with the RINs. Contacted the EPA. These guys they're not even set up for the system. And they said, oh, they're in trouble. They need to be set up for the system. And I said, how do I backdate and get those RINs back? They said, you can't. That company might be in trouble, but you cannot retroactively create RINs. Let me finish this slide about RINs, and then I'll answer the RIN question. So each gallon of biodiesel is eligible for 1.5 RINs per gallon, and that's in contrast to ethanol, which is 1.0, in contrast to renewable diesel, which is also 1.5, which kind of sucks. Or it might even be 2, or it's at least 1.5. So there's also some other things that are eligible for more credits, such as cellulosic ethanol, which is what the EPA and IRS feel like is the holy grail. One of the things that we have to recognize here is that we're all working in first-generation biofuels. Corn ethanol sucks, but without corn ethanol, we'll never have cellulosic ethanol. So you can say they're the bad guys, but you can't have second-generation biofuels without first-generation biofuels. And I repeat that statement probably at least once a week to somebody who calls and says, I heard that it's a net energy loss and all these kind of things. And I say, even if it was, I'd still do it until the day that we get something better, because it's still 10 times better than whatever else is out there. So the rationale here, this is the big thing. Congress said that a certain percentage of America's entire fuel capacity should be from renewable fuel. They first started at about 4.8%. This year, they've upped it to 7%. So if you're Exxon or Mobil, you have to create 7% of your fuel as renewable. Well, if all you make is gasoline and diesel, you're at 0%. So what do? You find people that have renewable energy credits that they did not need or that are way above their threshold. So I'm not expecting you to get a call from Exxon, but I can sell my RINs to people that are going to aggregate those RINs that are going to get that call from Exxon. So in one sense, we're helping Exxon comply with their rules. On the other hand, do I want them to pay me, or do I want them to go out and establish their own renewable fuels? I'm not so sure I want Exxon to be making renewable fuels right now, which is a real tough question. Once these big guys get into it, a lot of things can change for us. So real quick, so you have to file quarterly and annually with the EPA. If you're not a RIN producer, like if you're not producing biodiesel, you don't have to do annual registration. It's a real weird thing, and you have to use their CBX system, which is an electronic exchange, data exchange system, that you have to register for and go through this incredibly difficult process. RINs have a street value today of about 5 cents each. So if you sell 100,000 gallons a year, like that's probably about where we're at, we've got 5,000 coming in. Hey, it's extra money. However, one thing I've learned is that the RINs expire in February, the end of February of the following year. So if you're a producer like Exxon, and you get to that end of the year, and you say, oh man, I didn't do enough, you've got until February, the end of February, to comply with the calendar year that's already ended. So although I've been offered 5 cents a gallon, I said no, because I hope that $5,000 risk is not going to get much lower than 5 cents. The worst thing I could do is lose a couple $1,000s. The best thing I could do is have a gold mine that in January or February that they're paying $1, $2 for these things because they've got to comply. It's federal law.
Equivalent to a carbon credit, basically.
Yeah, it's a new carbon credit system, and there's a couple of new exchanges that are forming to trade these things. So we'll just wait it out and see what happens in January of next year. Maybe we've got a new revenue stream.
Speak just a little bit to how we go about setting up something to get the credit for it.
Sure.
What's the accounting for these credits?
So the way the credit system works is when you get, you know what, I'm going to show you, if we have time left, I'm going to show you my spreadsheet that I use to track this, because I track the RINs too. But anyway, the way you do it is, if I get a load of 7,500 gallons, my producer is obligated to give, well, if they give me the RINs. Now, here's another point. You can provide up to 2.5 RINs per gallon of biodiesel when you sell it. This is weird, it's complicated. But let's say you're a producer, and you're only making 1.5 RINs per gallon. However, some of your customers don't care about RINs. They're just reselling it. They're not in the market. They're not in the business. They're in a whole different industry. They just need the biodiesel. So for those people that don't know about it, or don't care about it, or don't have to comply with it, some of those producers don't give those RINs. What they do is they keep those RINs, and as a bonus to the customers they really like, or the customers that do have to comply, or basically as a competitive advantage, they can give you up to 2.5 RINs per gallon. So that's kind of cool. So when we get it, we find out here's our RIN, and the word RIN is a number itself. So you get this 32-digit number that's 32 digits, and you track that in your software. I do it in QuickBooks and with Excel. So in QuickBooks, every time I get a 7,500 gallon credit, I have an inventory item of RINs. And so right now I think we've got 27,000 RINs. And so when maybe it's, I guess it's a lot more than that now. Then I have an Excel spreadsheet that I have to fill out, and I keep that as my record too, what I file with the IRS. And then I have another Excel spreadsheet that I use as kind of the starting point to fill out all these documents. One of the biggest things that I hope that you'll come away from this presentation with is that record keeping is one of the top things you should be concerned with as a business. The amount of paperwork that we have to deal with is unbelievable, and I can see people being put out of business. I can see people losing their homes and having some very, very big problems from not keeping records. So we don't want that to happen. I've taken it on myself to do the record keeping. Even though we have an accountant, I asked the accountant, can I just give you every piece of paper that I get? And he says, yeah, but you're going to pay me to death. You know, I'll do it for $50 an hour or whatever his hourly rate is. So, any more questions about the RINs? We do have some more slides. Okay, so again with the EPA says if you have all this liquid, even if it's non-toxic, you can't just spill it. It's going to go in the waterways. People are you're going to kill birds and stuff. There's been a lot of press recently about some people who are probably going to go to jail, probably rightly so, for dumping glycerin, dumping methanol, dumping all these things in the wetlands and stuff. So the EPA requires any facility with more than 1,300, maybe it's 1,320, 1,320 gallons of any liquid that's not water. Now I take that back. Any liquid that is flammable, and I think it's any liquid that isn't water is flammable at some point, or combustible, to file a formal Spill Prevention Countermeasures Control Plan, SPCC.
Is that per year?
No.
For what?
It's a one-time filing, and I don't remember what the maintenance.
No, I mean the 1,320 gallons.
Oh, it's capacity, tank capacity.
Oh, okay.
So you could have 260 barrels, and you could have to comply with this. Or maybe it's 65 or whatever it is. Anyway, do the math. If you have that much in capacity, you could have to be forced to file this. So the SPCC must be signed off on by an environmental engineer. You can't just write it yourself. I know Steve has had some experience with it. Did you ever get one?
We're working on it right now.
Okay.
And luckily we have a PE in our co-op.
SCORE, which is a something engineer? Professional engineer.
Yeah.
So in our case, one of the things that I don't mention in this presentation, but I found that our state regulatory board has a program for people, an anonymous, I don't think they call it anonymous, a confidential review of your entire environmental system. And so they hired this company that cost thousands of dollars. They fly over from Houston. It's called Emerald Consulting. And they spent hours out there reviewing the site. They looked at our site plan, which we don't have one, but they looked at everything associated with our physical plant, where the street was. They did reviews on Google Maps to find out where the reservoirs were, all these kind of things. And their goal is to give us something in writing that says this is what you need to correct. The bad news is I actually do have to comply with that, but they give us 2 years. I feel like if we can't comply within 2 years, we shouldn't be in this business. So I'm okay with it. It wasn't an easy decision to come to when she started calling me and saying, okay, I'm going to come out and we're going to look at this, we're going to look at this. So that company, 3 months later, has not come back with their report.
But once you create that paper trail, then you're obligated to follow through on it, right?
Yes, 2 years. They give us 2 years to comply.
And remember, local law may be much tighter at
Yes.
state or local level.
Good point. You have to go with the most restrictive law. So in our case, our state laws, they haven't, either we haven't inquired enough about them, but what we've heard is that they're about the same. Except for one stormwater thing, which I believe is a state thing, where every quarter we have to take a stormwater runoff sample, and we have to send 2 samples a year off to a lab for testing for heavy metals. I think that's a state thing. Okay, so state rules. So the first thing is you need to learn what your state calls its different agencies. So when Todd and I in different states talk about these things, they're different. He has all these things, Department of Natural Resources, I hear, maybe that was Steve.
Board of Equalization for this particular guy. It's a comptroller in our area.
Yeah.
Board of Equalization.
So what you have to do is you gotta figure this stuff out. So we have a state comptroller and a secretary of state. And that's where we got our sales tax permit, all these kind of things. So we have something called the Texas Commission on Environmental Quality. And it's based on, years ago, they had all these different agencies that all had sunset clauses. They were all getting ready to expire. Texas would have had practically no environmental regulation. And they stepped in and created this big quasi-organization encompassing everything. Kind of like the TSA did, where they said, we're going to put in immigration, and we're going to put in airport safety, and everybody's like, isn't that a bit much for one group's charter? Same thing. So be prepared to file your state income tax. I mentioned that because we don't have it. Be prepared to file franchise taxes, which was a big one for us. We had no idea about franchise taxes, except that only really big companies needed to file franchise taxes. Well, it turns out really big companies are companies that sell $300,000 or more a year. Well, the price of biodiesel being almost $5 a gallon, it's not too hard to get to that point. We did our franchise taxes. It was still zero, but we still had to file it. Also, don't forget that equipment purchased used, you purchase equipment on the used market or online, must have sales tax paid on it that is called a use tax.
Is that common to all states, or are there different?
It's not. I bet you it's common to all states, but it's not federal. So, there's no, let's see, let me think about that for a second. There's no federal income tax. There's no federal state tax. It's a state income tax. It goes state, local, city, local, things like that. A good example is, we bought a $3,000 tank on Craigslist, and at the end of the year, we had to pay, I don't know, $100 in sales tax on it. We bought $7,000 worth of used refueling stations from the company that went out of business. We had to pay a lot of money, almost $1,000 in sales tax. We didn't factor that in when we bought it. There are some cases where we sold used equipment and didn't charge sales tax. At the end of the year, when you start tallying this stuff up, you realize you have to reduce the sales price to incorporate the sales tax you should have charged that customer. And that sucks.
And in a lot of states, that's illegal. You can't do it.
Oh, okay. Good to know. So, more state rules. Contact your state Department of Agriculture. There are a number of incentives on a state basis for making biofuels. In our state, we had a 16.5 cent credit per gallon from the State Department of Agriculture. And the ethanol, let's see, somebody went into the legislature and decided that they could find a way to call it, here it is, the petroleum industry went to the legislature and said, if this applies to biodiesel, it applies to ethanol. And they knew that the state wouldn't want it to go to ethanol because there's going to be way more ethanol coming in. And it would just be too much money, they didn't have the funding for it. So the legislature said, okay, forget it, it's over. So they canceled our 16.5 cent credit. That was to the producer. Contact your state Department of Transportation to find out rules about hauling or selling fuel. We have to have a motor fuels tax license, which was this huge $30,000 bond we talked about. We also found out that in Texas, if you have a trailer for commercial use that is rated for over 4,000 pounds, you have to have it inspected, just like a car. So there's some weird rules that you might not be aware of. Also, register with the state employment agency as an employer, because there's something in our state called Texas Workforce Commission, where we're obligated to pay 3% of our income for the first 18 months of having employees. And now 3% of our income is pretty big. If we had said we're an employer 18 months ago, it would have been 0. And then when they reevaluate, they put it at like 0.2%. So that was one I did not know. Did you have something?
I'm not sure how much this doesn't really apply to your business, but I'm unclear on the rules on who oversees the definition of toxic, as in hauling off schmutz from oil, any trap grease you're forced to deal with, or glycerin.
Yeah, I think I mentioned that here too.
Got it.
It's not on this one, it's the next one.
Yeah.
But it's a good point.
Yeah.
If somebody says they're authorized to haul something, like we had this case where somebody wanted to sell us a bunch of vegetable oil that came from an elevator shaft, we said, well, can you legally haul that to us? They said, oh yeah, we're licensed for all this stuff. We're licensed for everything. And of course, they didn't have the registration. They're not a licensed rendering facility. It is very state specific. In our state, you have to have a hauler's license. Hauler's license costs about $500. The rendering license to take that oil, do anything with it, including simply storing it on your facility, costs about $3,000 a year for what our income level, based on the biodiesel sales. Glycerin, I have no idea.
Yeah,
but that's a good point, especially if it has methanol in it. So some other local rules, go to the zoning board and find out if the facility that you want to sign that 5-year lease on can actually be usable for what you want to do. Obtain an occupancy permit. Some of you may know that on Friday I got a call from my partner that said the occupancy permit people came out and shut us down on Friday. So our business is shut down right now. They also told us that we didn't really have to shut down, that they wouldn't come out and inspect us again, but we had 30 days to comply. So on Monday morning, you can bet I'll be down there figuring out what we need, which is something we wanted to do 2 years ago, but felt like if we sat down with them, they might actually put us out of business before we ever get started. So that's a very common theme that I see here, is that people get started before they check the rules. If they had checked the rules, there'd probably be a whole lot less of us here. So I can't really say we all should have done it, but it isn't. Introduce yourself to your potential new neighbors. So I went over next door and said, hey, I'm over here, and we're about to put this big hole in our wall, and we're going to put a fan, and all of the exhaust from our cruddy oil is going to aim right at your shop. Is that okay? And they said, oh yeah, it's no problem. We've got a waste treatment center down the street, and it's no problem. I go, all right. And see, the other point to take away from that is to actually be honest, because a lot of people don't. They're just not straightforward and to the point with this stuff, because they know that the answer they're going to get is not what they want to hear. So have the facility inspected by the fire marshal. In our case, there's a city fire marshal and there's a county fire marshal. So we found that in the city, one rule applies, but if we're outside the city, the county rules apply. And that's important because we had a customer who wanted to set up a biodiesel refueling station at their tow yard. So I called the city guy and I found out we can't even have an above ground tank in the city of Austin with anything petroleum related in it because the flash point's too low. However, if we blend at least 70% biodiesel in it, the flash point becomes high enough where we get to do it. So then I called a county guy and he's like, I don't know what you're talking about. He had no idea. Well, that customer flaked out anyway, but there's still a point to be made. Check with all the various agencies. This stuff's an education for all of us, and you need to take this stuff and use it. Check with your local municipalities to see if there are any other restrictions. That's very vague because getting this information is very vague. You have to call agency after agency and say, here's what I want to do. Does that apply to you? And they say, I don't think so. Call the health department. And you call the health department and they say, oh, you're going to be doing that? You need a special permit. And I say, well, I'm not using it for food. Okay, then you don't need that permit. Why don't you call this other guy? So these people don't necessarily know much, but they do know who to call. So they give you that information. Also, this is a big one. Find out the phone number of your city's spill response team. Almost every city's got one. And put the number on your speed dial. It is on my phone today. If we had a big spill, the first thing I do is call 911 if it was going to interact with the streets. The next thing I do is call the spill prevention people. Then I would call my business partner and say, go get the shop vac. So I got a phone call from the police one time. They said, hey, I'm back here behind China Dynasty, and they're Ben White, this whole intersection is covered with oil, and your barrel's out here. Oh, shit. So I called my business partner because, I did not follow my own rule. I called my business partner and said, China Dynasty, I thought they had their own tank. And he said, yeah, there's this giant tank right next to it. And I said, have you ever collected from there? No. I said, have they ever used our container yet? No, they haven't used our container. So I called the police guy back. Can you look at our container and tell me what's in the bottom of it? He said, it's bone dry. Is there any liquid on the bottom? No. All right, it wasn't us. So it was the other guy's container. We got out of the house. Okay. Fuel, are you guys still interested in more of this stuff? Are we running out of time?
Got about 2 minutes left.
Okay. Fuel quality and product liability. Establish a fuel quality program in writing. Everybody says it. Not many people do it. We haven't done it. We have some very basic guidelines. Listen to your gut and your nostrils. If it smells like cotton candy, which is what some of our real strong methanol-laden stuff smelled like, if it burns your nostrils or just like, whoa, it is probably bad fuel. And it may sound obvious, but when you get this load of 7,000 gallons and you've got 10 customers that are waiting on it, and you say, geez, what do I do? The right thing to do is say, get out of here, go back. We actually had to do that. We had a load of 7-month-old palm-based biodiesel that was delivered to us. They pumped it into our tank, and it immediately clogged our tank. So then we took a sample from the truck, and it looked like a snow globe. And so we called them and said, well, where's the COA, the certificate of
analysis?
Thank you. Where is that? Because you gave us one, but this doesn't match. Because this, something was wrong with the paperwork. So the guy drove right over, and he's like, well, this is some stuff we had back in October, and we didn't sell it. So this palm sat all the way from October until April, and then they sold it to us.
Oh.
So we made them come out and drain our tank and pay to have our tank professionally cleaned. And the only reason we bought the palm oil, by the way, which is because Pacific Biodiesel shut down. The best people in the whole world, we love them to death. They closed down and we were left high and dry. We were able to buy their last few loads, which lasted us several months. But there was a point where we had no fuel. We had to go with palm oil. And in fact, the company that that came out and cleaned the tank, or the people that we bought the bad fuel from, they gave us a certificate of analysis from brand new palm oil that had just been received to the Houston Ship Channel, and we bought that. So we did sell that one load of palm. We didn't have any complaints with it. Anyway, so basic test. I'm not going to spend any time on this, but I'm going to tell you that 27.3 test. We take 4 vials that I called the flip test people and said, where did you get your vials? And he gave me the name of the place, and I bought 150 of those little vials. I take 4 of them every time. I put a sample in it, and I test for clear and bright. I put the 27.3 test. I put half water and half biodiesel and shake it up just to see if it's going to be cloudy. And then what's the other one?
Flip.
4. Oh, the 4th one is, that's 4, the flip test. Yeah, so I use the flip test. We don't really get fancy with it. We buy only from big commercial producers. That's all we have in our area. If I had a little co-op, I'd love to buy from them, and I'd get more involved with the quality testing. But at this point, we get the COA, we take a sample, we do our test, and we move on. Right now, we're selling biodiesel from animal fat, and from a quality perspective, it's the best experience we've had. We have not had a single call from a filter or anything. I'm very surprised at that. So the other thing here that's very important is take ownership of problems. We had a terrible batch, the one that just about knocked me out with the bad methanol. I don't know how many hundreds of gallons of this stuff that we had in our shop. We had in our customers' tanks. We breathed this stuff for weeks while we were trying to figure out what was going on, not knowing that it was bad fuel. We had our competitor drive up to our shop with 100 gallons of crappy fuel saying, I just sucked this out of Willie Nelson's tour bus as it broke down on the side of the road. Here you go. So we had a pretty disastrous experience, and I think the way we saved those accounts is by taking ownership of it and saying, you know what, we did not have a good quality process. We bought it from a small producer. He had a centrifuge that clogged. He wasn't doing his job cleaning it, and so it passed through. He hired a new person, and he didn't double check their work. He relied, and so we really identified what happened. And I've worked for Dell for a long time, by the way. I worked there full time. And so one of the things that I've been involved with is what they call crit sits, critical situations. I've worked on computer systems that are 911 detection systems. I've worked on a lot of high-end systems, and so what that's taught me is to follow a process, establish a process, and follow it. And if I wasn't working there full-time, some of these processes that we just don't have, that's what I'd be doing. So communicate regularly with your customer. We had a nice little old lady who had her car broke down. It was the fuel filter. It was because of this bad fuel. And she had a $400 bill from the dealership. We sent that bill from the producer and forced him to pay it, and he did. So we held our supplier accountable, and he did. Real quick, mechanics and car dealers. I've got several stories about this. I'll make it brief. Theft around the country. We have actually had somebody come to our place that we really believe was a spy for this other company, trying to rent a room from us, asking us all these probing questions and then disappearing. And then he comes, then we had theft, and he shows up. Yeah, I can help you out. I can interview him. So he goes down and interviews the company that we had the theft at, and he comes back and says, oh, it's, I got this guy's name, and I look up the name of the company, and they don't even do yellow grease, but the company that does, it's a brown grease hauler, but the guy that's associated with that company used to work for a company that's this other company's competition. So I start going through the list and figure out what they're trying to do is they're trying to make another enemy of that person and somebody else to say that that person's bad to the rendering people so that they'll be a more likely suspect for something that they're involved with. So all these things add up to that we have a spy coming into our facility saying, how's the rendering business? So you could actually be arrested. Be aware of that. If the competitor calls you directly, fight the urge to tell them about how honest you are and about the great things you're doing for the community, because they don't care. All they want to know is if you did it. And expect to spend several $1,000s on a retainer. So I had to write a check for $2,500, and to date, that attorney has done nothing more but make a couple phone calls, and that's it, make a couple phone calls. So what I'm doing is I'm leveraging that relationship, though. Whenever I have a legal issue, I'm calling him. And I'm waiting for that day where he says, I need another $2,500. And he hasn't so far. So I hope he's taking that into account. And he's saying, these people paid me a substantial amount. I'm going to give them the extra. Okay, next. Any questions?